Welcome to Massive Passive Cash Flow, the podcast that guides professionals to financial prosperity. Join our community and let's start building your wealth. Here's your host, Gary Wilson.
Hi, everyone. It's Gary Wilson here, and welcome to this week's live, or in your case, recorded, real estate investing for professional men and women. We've got a great guest here. Jay Connor's on board. I've known him for probably 6 years now. And we'll get into some excellent subject, which is private money, which is very timely right now. But before we do, just remember, subscribe to the podcast. It's now being downloaded in nearly 50 countries and over 30 channels, Stitcher, iTunes, iHeartRadio, all the usual suspects there. And by all means, go to realestatewithgarywilson.com website, click on members area. If you're already a member, you know on the left-hand side you log in. On the right-hand side, you get to check it out for free. You can see what this is all about, the community we've been building of investors and investor agents. These are real estate agents I've trained personally to work with us investors over the last nearly 20 years. There's over 4,000 of them out there, and you can mingle with them, network with them. They know exactly what you're doing. You know how to do it because I've trained them myself. And now you've got the valuable asset of having a valuable team member to help you work through the maze of investing. So without further ado, let me introduce Jay. So Jay, welcome aboard, man. I appreciate you taking your valuable time to share your wisdom and knowledge with the followers here.
Hey, Gary, thank you so much for having me on the show. I'm excited to be here. I'm excited to talk about private money and how that's made such a difference in my real estate investing career. And thank you so much for having me.
You're welcome. Hey, for those who may not be familiar with who you are, I know you've been doing this for a bit, and you've a great reputation. A lot of people speak highly of you, but for those who don't know you, can you kind of paint a picture for us of who you are, where you came from, how you got to where you are, and that I think that'll help give some context, and we can get into some case studies, some strategies people can use, stuff like that. We'll get into the what. But if you wouldn't mind, if you don't mind sharing, give us some good juicy details. But we want the good stuff, okay?
Sure, Gary. Well, thank you. Well, my wife, Carol Joy, and I, we started investing in single-family houses here in eastern North Carolina in 2003, full-time. And we're in a very, very small market. We live in Morehead City, North Carolina, right here on the coast, which is 3 hours north, straight up the coast from Myrtle Beach, South Carolina, 3 hours east of Raleigh. Our total target market that we invest in for single-family houses is only 40,000 people. But the significance of that is that we do 2 to 3 deals a month, so we're not large volume. However, our average profits per deal, per single-family house, is $67,000 per deal.
Wow.
So the story or the takeaway from that is you don't have to be in a very large populated market in order to make very, very significant income. So how we find our deals, 25% of our deals actually come from our foreclosure system. Carol Joy and I started developing that in 2004. And that's where we're able to actually offer assistance and help people that are in foreclosure before other real estate investors even know these opportunities exist. But how I got into private money, Gary, was for the first 6 years that we were investing in single family houses, from 2003 until January 2009, I was relying on local banks, mortgage companies to fund our deals. And I remember, just like it was yesterday, I called up my banker. I had 2 deals under contract. This was in January 2009. Mm-hmm. And each of these deals, Gary, represented over $100,000 in profit and equity. And I told my banker the funds that were required to fund the deal and purchase the houses. And I learned very quickly on that phone call that my lines of credit had been cut off with no notice, and I didn't have any way to fund my deals. So I reached out to a friend of mine whose name is Jeff. At the time, he lived in Greensboro, North Carolina. And I said, Jeff, I just got cut off from the bank. And he said, welcome to the club. So did I last week. I said, what are we going to do? Well, Jeff told me about this thing called private money. So I started investigating it and diving into it. I'd never heard of private money. I'd never heard of self-directed IRAs. and how that is so important to be successful in raising private money. And so I put my program together, and in less than 90 days, I was able to raise $2,150,000 in funding for my deals that didn't have any origination fees, didn't have crazy high interest rates, and to where I was actually able to put my program together and put together frequency of payments and set the interest rate and set the terms. And what's also interesting, Gary, is to date, ever since 2009, when I started using private money, I've yet to ask anybody for money. People say, Jay, how in the world do you have all that funding and you didn't ask anybody for money? It's simple. I just put the program together. I made the information available, and those people that have investment capital or retirement funds looking to get a high rate of return safely and securely, then they start chasing me, and I'm not chasing them, because when they learn about the high rates of return that they can earn safely and securely, they start running us down.
Yeah. I love that. The thing I like about private money, a lot of people will go and start thinking, well, this is hard money. And sometimes it is, but it's quite often not. I mean, I've got students, actually in North Carolina recently, a student got a 6% private money loan.
Absolutely, yeah. Well, there's the big difference between hard money and private money. First of all, most of the time, hard money is actually a broker or a middle person, is a broker of money, to where myself, and I've taught now thousands of students how to circumvent the middle person and go straight to the source. So what a lot of hard money lenders do is actually use my information and my training, and they go raise their own private money, and then they mark it up and charge origination fees and et cetera. And to where what I do and what I teach is how to go find these private lenders yourself to do business directly with them. Yeah.
Well, that's pretty awesome. I know for me personally, this is way back in the late 90s. I started investing in 86. In the late 90s, I got very serious about it because I wanted to retire. And I did retire when I was 40 years old in 2003. But late 90s, I got to the point where I was starting to hit what's called a loans to one ratio. So the traditional, and I always went to community banks. They were easier to work with. But it turns out they can only lend but so much money to any one borrower. It's called the loans to one ratio. And I thought, well, what do I do now? And then that's when I came across this private lender. At the time, interest rates were 8%, 8 to 9%, and I got 10% private money. I thought, well, I'll do that. So that's what made me a believer and a proponent of that type of strategy. So if you wouldn't mind, let's take maybe an example. I mean, I know a lot of the listeners, I'll just tell you, there are a lot of times, and they're business owners, they're very often professionals in their fields. They could be professional teachers, firemen, policemen, engineers, even accountants, things like that, military even. But business owners like dentists, for example, are usually pretty savvy. They're pretty business oriented. And so let's say we got a dentist, Jay, maybe they're 4 years out of school, they've been in practice for 4 years, they're getting ready to start their second practice, and they realize they now need to save for retirement. See, dentists are famous for saying they're afraid of being stuck behind the chair. And we know that sometimes money can be tight. If you own a business, you sometimes are already borrowing money. So what would be an example of something we could do for that kind of person? Or maybe you've got your own example, your own case study from your experience that we could draw up for somebody, for people who are professionals and often business owners. If you don't mind sharing, obviously the name shall remain secret, but any particulars you can share, the type of property. I just want to give people an idea how really simple this is to do, as long as you follow the rules. Take Jay's program, read his material, go to his website. We'll talk about that later. But it's actually one of the easiest things you can do, guys. So Jay, if you don't mind, take her away. Maybe something comes to mind. One of your favorite ones,
Sure. So Gary, you want me to speak to that from the perspective of a real estate investor or from the perspective of a private lender?
Let's do the investor perspective first, and then maybe you can talk about what it would be like, because some of these folks, I know people right now are on a cash basis, and they might be interested in lending money out, but they're maybe fearful because they don't know how,
Sure.
Yeah.
So let me. So actually, I can answer your question and speak both to the private lender and to the real estate investor. So let me review my program that all of my private lenders enjoy, and it's a win-win. I mean, of course, any type of program or business you do, it's got to be a win for everybody, or it's just not going to work out for the long term. So first of all, let me talk about interest rate. So right now, we pay 8% interest only. Now, the reason we pay 8% interest only is because when you pay or accrue interest only payments, it's a win for the private lender and it's a win for the real estate investor. And here's how. When you're paying or accruing interest only payments, it's a win for the private lender because if you're paying the private lender principal and interest, they're not earning as much money. Right. So if you're paying the principal down instead of paying interest only payments, then all of their money is not at work. By leaving the principal loan amount to remain the same until the property sells or it cashes out, then that also helps cash flow for the borrower, for a real estate investor. So interest only payments are less per month or per quarter or ever how often you're doing it. So it helps the cash flow of the real estate investor, and the private lender over time actually makes more money. So that's the interest rate. The length of the note. So the length of the note is typically 2 years when we're using investment capital, and it's 5 years when we're using retirement funds. So it depends on the exit strategy of the real estate investor. If you're flipping houses, I would recommend still keep the term at a minimum of 2 years, because if you've got a major rehab going on from the time you purchase the property, depending on your relationship with contractors, it could be a few months before, you actually have that, property to market. And then, some properties sit around a while, depending on the market that you're in. So that 12 months may not give you enough time for some properties, depending on the scope and your exit strategy. So 2 years. Now, retirement. So let's talk about retirement funds for a moment. So real estate investors and private lenders need to be aware of self-directed IRAs. So I had never heard of self-directed IRAs until I learned all about this private money thing back in 2009. And so a self-directed IRA is an IRS-approved third-party custodian that will actually allow you to transfer your current retirement funds over to, wherever they are. It can be a 401k, Roth, IRA, a pension, wherever. It could be in the stock market. You can have retirement funds in the stock market. So you can transfer those funds over to an IRS-approved self-directed IRA company, and then you as the private lender, you can actually loan that money out to a real estate investor. And here's the cool thing. By the way, when you transfer it over, there's no penalties. There's no tax penalties whatsoever. Okay. And there's no limit to the amount of money that your retirement funds can earn per year, right? So, I've got one private lender. I got 48. I got 48 private lenders right now, which, by the way, folks, a private lender is nothing more than a human being. It's an individual that loans money out from their investment capital or their retirement accounts. But I got one private lender just last year earned $65,000 tax deferred because of it being in their self-directed, IRA. Just a couple more quick points in the program. So we give all of our private lenders what's called a 90-day call option. So if they have some type of emergency come up and they need their funds back prior to the note coming due, all they have to do is just give us notice, and 90 days is way more time than we need to actually replace their funds with another private lender's funds and, get their funds back to them. The frequency of payments, we leave that up to the private lenders. Some of our private lenders are seniors, and they actually rely on the income So we have some private lenders that get monthly payments. We have some that get quarterly, some get semi-annual, and the longest we stretch it out is annual. Another important point is we do not borrow more than 75% of the after repaired value of a property.
Okay.
And the reason for that is we want to give a large equity cushion to the private lender so that in case there's a market correction or what have you, then, pricing can be adjusted down and everybody can be made whole. Right. So it's a simple one-on-one transaction between the real estate investor and a private lender with no middle person involved.
Yeah. Now, do you go ahead and like a what I would consider a traditional note and mortgage with a bank? Do you go ahead and draw up a similar looking note and mortgage? Different language maybe, but the same structure, and does it get recorded? I know I've had one of the private money loans I was a borrower one time. The lender, he drew up liens, Jay, but he actually didn't record them. He said, I'm not going to ever record them unless you are late, but if you're late one day, I'm going to go ahead and record them, that kind of thing. He never did, but what are your thoughts, or what's your suggestions on those as far as the note mortgage and any recording that if it takes place,
Right. I don't borrow any unsecured funds because I don't want to put my private lender at that risk. I want all of my private lenders to have their notes, the promissory notes, collateralized and backed by real estate.
Yep.
So the promissory notes and the here in North Carolina, it's a deed of trust. Most people call it a mortgage. Those documents are drawn up by my real estate attorney. I recommend to other real estate investors, get your real estate attorney to draw up the documents. In my Where to Get the Money Now system, my home study system on private money, I actually have a one-page document that you just fill in the lines. There's only 8 questions. Mm-hmm. Who's the borrower? Who's the lender? What's the interest rate? Frequency of payments? How much the payments are? You just fill in the blanks and email that to your real estate attorney or your the paralegal. Have them draw up the documents. Now, in some states, I know people use title companies for their closing agent. Some states you use escrow companies. I still recommend that the real estate attorney draw up the documents,
okay.
And then your closing agent can do that. So again, I want all of my private lenders to be protected with real estate as the collateral back in the note.
Yeah. Well, I'm glad you said that, Jay, and I appreciate that. And I appreciate the explanation, too. I mean, it's to be expected. Most borrowers borrowing money to buy real estate would expect that anyways, at least if they know what they're doing. And it is, it's a protection for the lender, I mean, some states are more difficult, some are easier, but the bottom line is it gives you the what you need to pursue taking the property over, or perhaps even having the loan replaced somewhere else. And there's just lots of reasons to do that. It's just what we call it the big boy clause, which is you put your money where your mouth is and you stand behind it and you back it up. And I wouldn't borrow money if it wasn't collateralized. And I'm all real estate. That's 100% of my life is real estate. So,
exactly. And Gary, when we talk about protecting the private lender, we also protect the private lender on every deal to where they are named on the insurance policy as the mortgagee. So the private lender really replaces, they're the bank. Okay.
Correct.
So you borrow money on real estate from any bank, they're going to require to be the mortgagee. So what that means is, in case of a total loss or a total claim, God forbid the house burns down or whatever, well, the private lenders as the mortgagee get paid off first. They get paid off first and they're made whole before, we get paid. So that protects them. We also name them on the title policy in case there's any title issues down the road. So the private lender gets all the protection that any bank would.
Yeah. Well, I tell you what, if you wouldn't mind, let's touch a little bit on timing. My first house was bought in January 1986. Of course, 1986 was when the Congress passed the Tax Reform Act of 1986, which removed a lot of loopholes for S-type people, S corporation folks like doctors, for example. will create abundant opportunities for young guys like me. But I've now been through 4 cycles, up and down and up and down, up and down and up. And the funny thing is, Jay, I don't even really get worried anymore. In fact, I get excited. I know it sounds crazy, but it's usually whenever there's adversity, there's opportunity. And if you take the last recession, the properties didn't go away. They didn't just disappear. They just changed hands. It was the greatest transfer of wealth in probably the history of the world. But when in terms of private money, are there different strategies? Like an up market compared to a down market, would you approach something differently? Is it the same strategy? If you wouldn't mind, share a little bit about time. I know you've, since 2002 or 3, you've of course now been through one complete major cycle,
Yeah, so, as of us, recording this show here today, the stock market is in turmoil. And the stock market, the Dow's lost, a third of its value in a short, 2-week period of time. And so that in and of itself creates huge opportunity. You got all these people that have pulled their money out of the stock market. They got cash sitting on the sidelines and they don't know what to do with it. So, even in the midst of chaos and fear, people are still wanting to get a return on their funds. Right. So, for example, tomorrow I'm closing on a deal on a house, and the deal required for me to borrow $200,000 from one of my private lenders. And so I knew this particular private lender currently has $500,000 available, waiting for me to deploy their funds. I was already using some of their funds on other deals, and we recently cashed those out. So they've got all those funds back to them, and they're waiting to go. So yesterday morning, I sent this private lender a text letting him know that I had a deal that I'm closing on this week, and gave him instructions on wiring $200,000 of his funds to fund this particular deal. And so as I'm sending that text, I'm asking myself in the back of my mind, I'm wondering, in the midst of fear and in the midst of chaos, is this private lender thinking that they should just be sitting on their cash and not doing anything in the midst of uncertainty, or are they going to want to move forward? And so I got the text back confirming that they wanted to move forward, and they wanted, they're going to, fund this deal, and they'll be wiring the funds. And then I asked the question, I said, is your other $300,000 still available? And do you want me to move towards getting that to work for you as well? Yeah. And he immediately came back and he said, absolutely, yes. I'm sure not going to put it in the stock market today, right? Yeah. So the moral of that story is, when you got a downturn in the stock market, you got all this cash on the sidelines, and you're a real estate investor, and you are looking to, looking for more funding for your deals. This is the perfect opportunity to make your program known and what you've got available for potential private lenders. And so before we leave the show, Gary, I've actually got a free gift that your followers can download, and it will actually teach them my program that they can offer potential private lenders. And in this free gift download, it will either teach them how to locate local potential private lenders.
Let's tell you what. Yeah, go ahead and provide the information, because this is people need to hear this. In fact, I'll just tell everybody listening. Businesses. When you buy stocks through Wall Street in a company, the company could go belly up. It's happened throughout the history of the world. But in real estate, as long as the physical building is still there on the land, the improved land, the tangible asset, it never goes to zero. It doesn't. So as long as you're involved, whether you're a lender borrowing money to the investor buying the property, or the investor yourself buying the property yourself, and maybe using a private lender, it's win-win. Yeah, I know it's a little bit scary if you haven't been through this kind of thing before, but Jay and I have. I mean, it's 4 cycles for me, and people are running around like crazy, and I'm thinking, I wish I could shake them and say, look at the facts, look at reality. And by the way, case in point, in the last recession, Jay, I had Wall Street guys calling me. One of the number one tobacco commodity broker in the world called me. We helped him create a closed-end mutual fund that all of his Wall Street buddies invested in, and we went out sort of buying big portfolios of properties. I had White Oak Capital call me, BlackRock Financial, wanted to deploy tens of millions of dollars in cash, money, because they knew real estate was like the gold. Right. So I appreciate what you're doing, and if you can offer that, we'll put it in the show notes for everybody to grab. But also, if you don't mind, give everybody the website, the link, how to get a hold of you, anything you can do to help people, because now is one of the best times to be doing this.
Super. So you can go to www.jayconner.com/3-gifts, So that's jayconner.com/3-gifts, And what the gifts are there, first of all, there's a 60-minute audio training that takes you through step by step the 5 steps that I used to attract over $2 million in less than 90 days when I was cut off from the banks. Yeah. In that audio training, I'll also teach you my own private lending program that I offer potential private lenders. There's also a book there that I co-authored called The New Masters of Real Estate, Getting Deals Done in the New Economy. You can download that digitally, or you can just send in a request there, and we will actually mail you the hard copy of the book. There's also a script that I use when I talk to potential private lenders on finding out if they're interested in learning about private lending. So that script is also there at that website. And there's also training on how you can locate potential private lenders right there in your own area. So yeah, get on over there to the website, and that will help you very, very quickly start learning about private money and how you can get it and how you can use it in your real estate investing business.
Awesome. Well, I tell you what, Jay, I think I speak for a lot of people when I say thank you for your valuable time on this beautiful, warm, sunny day to share your wisdom and knowledge and even free information how people can actually do this. And I'd love to have you back sometime. So keep an eye out for that. And for everybody listening, God bless you and your families. If you haven't subscribed yet, please do so. It's Real Estate Investing for Professional Men and Women. Take Jay up on his offer. Go to jayconner.com website /3, right? Gifts. Is that right, Jay?
Yeah. So the numeral 3 dash.
Yes. Thank you very much. And we'll put it in the show notes. And also, go to Real Estate again. Go to Real Estate with Gary Wilson website. Check out the member area. It's free. Just get all the stuff you can get for free, guys. Jay helps you get the funding and also helps you be a lender if that's what you choose to do for other investors, which is the top of the pyramid. Okay. And I'll show you how to line yourself up with the right agents to get the right properties and stuff like that. So we're both investors. And I know Jay personally. This is one of the guys I can vouch for. So take advantage of it. And we'll see you on the next podcast. In the meantime, take care and God bless.
Thanks for listening to this episode of Massive Passive Cash Flow. Be sure to go to realestatewithgarywilson.com to join our community and start building wealth today.